On July 9th, the entire cryptocurrency market can flip. There's a deadline. Trump put in tariffs for the world. China and Canada and Mexico, all these aggressive tariffs. The market dumped. Then he put a tariff pause, and that deadline is coming in July 9th. I actually don't think it's going to be bearish, though. I actually think short term and long term, this could be bullish for the cryptocurrency market and especially for Bitcoin. But just to be clear with you, it's uncertain. So nobody could predict the outcome of this. I'm just going to lay out all the details from an unbiased, unemotional perspective. And I'm also going to tell you what I'm doing with my portfolio. But just to be clear with you, if he fails with the deals, it could mean actual chaos. We have very specific price data that shows the last time something was kind of like messed up with the tariff policies, the market dropped like 25%. But then the opposite is true as well. If he strikes really good deals, it could mean we break past all-time high for Bitcoin's price and altcoins start following. Everybody needs to focus right now. They need to focus on the cryptocurrency market, look at the bullish side, look at the bearish side, adjust their portfolio to make money, adjust their portfolio to save money if the market does drop, and you need to lock in. Right now is the time. This is super important. By the way, if you haven't subscribed to the channel, my name is Alex. I talk about cryptocurrency. I've made millions of dollars off of cryptocurrency, lost millions of dollars off of cryptocurrency. Now I'm the owner of CoinPix Capital, and I make these YouTube videos as a way to communicate to other investors. So here is every policy change for the tariffs and statements as well in the month of June. You can screenshot this for your own notes or whatever the case is, but as you can see here, I want to bring your attention to June 29th. On June 29th, he reiterated the China rare earth export deal and affirmed the need for tariffs to fix the trade deficit. So he's actually putting in implementation. He's actually doing stuff. There's not only statements, but he's also making claims that there will not be another extension. So he specifically said there will not be another extension. We had a 90-day window, but this will not happen again. So he has to make deals. And it looks like he's actually putting in work. So recent events show mixed signals when it comes to statements. We don't know what's going on, but progression is happening. He will not extend. This is super important because a lot of people are saying it's bullish because he might extend it. I even said that, but he officially came out and said, I am not extending the July 9th tariff pause. That means in like 10 days, depending on when you're watching this video, we will have something dramatic probably happen, okay? So if you have too much exposure to crypto, maybe take a little bit off the table, even at a loss. And it's okay. A little bit doesn't mean you sell everything and freak out. And if you have underexposure, if you don't have enough cryptocurrency, maybe it's time to think about accumulating maybe some undervalued altcoins. Don't start buying the things that are all-time high. Maybe think about the things that are undervalued. And I highly recommend you stick to the base ecosystem. Find some, RWA or AI narratives, gaming narratives within the base ecosystem. Stick to the liquidity pool. I'll talk about that in other videos, don't worry. And if you look at this chart right here, this is Bitcoin's price. You can see that again, when it comes to tariffs, they have affected the market in a negative and positive way, but we know that it increases volatility a lot. So just to be clear, Trump put these like really aggressive China tariffs in February of this year, and it dropped Bitcoin's price by 29%. And obviously we know that altcoins are like an amplifier, right? So altcoins got eliminated and destroyed. I know a lot of people have been talking about this in my comment section. I see it. People are like, hey, Alex, you sold too early. But the thing is, you got to comprehend, I don't buy Bitcoin. So if that was Bitcoin, that would make sense, right? I sold at a specific time because I made the claims that altcoins would bleed out. And right now that has held true. Bitcoin's at all-time high. Altcoins are like 70% down. So I am a altcoin position trader. So context is important. Context is very important because people try to apply the principles they learned in the video to their own lives way too closely, right? So I said, I am selling my cryptocurrency at the beginning of the year. I said it specifically, right? I said it's bearish, right? I was like, hey, and I might have been wrong like about like the exact top of the day or the exact week. But the reason why I said that and the reason why I was so bearish is because I hold only altcoins. Only altcoins. And as you guys know from my recent videos, right now, Bitcoin's at all-time high. Ethereum is not even close. So we have been bleeding out specifically with risk on assets like altcoin on a higher level than Bitcoin. So in terms of Bitcoin, I was wrong, but I don't buy Bitcoin. In terms of altcoin, this was correct. I saved a lot of capital by selling my altcoins, okay? It wasn't perfect, but I'm telling you, like, there's context and situation. Try not to be too specific. And I honestly want to apologize to you guys. I won't be too specific with the predictions moving forward. I'm just going to lay out the bullish and the bearish of what I'm doing. And I think that would be a good middle ground for all of us. So thank you for being a part of my community. But back to this chart. Yes, so the Trump-China tariffs, when he put out these statements, it negatively impacted the market. Now, it also positively impacted, as you can see right here, we came right back to all-time high with Liberation Day. So Liberation Day, he extended it, and there's all these tariffs. I'm not going to go into the specifics of that, but it also positively impacted the market. Now, my thoughts right now on the specifics of this is, well, I think the scare of tariffs are out the window. I think everybody understands that Trump is doing deals. He's making it work. It's very clear he has a control over this, a control element. Like right now, we had the biggest World War III scare, right? Everybody knows this. It's pretty crazy. If you look at Google search trends, this has been the biggest one in like the last 10 years. And obviously, Trump was able to negotiate and figure out a way to cease fire. So there's something going on. And to a certain extent, every single time we have these big catastrophic events, it seems like he pulls it off, right? Clearly. And it also seems like Trump does not want the market to fall. So for example, here's a hypothetical, and this is maybe wrong. I don't know. I can't predict everything. But as a hypothetical, let's say, July 9th, he puts in these specific deals, the market reacts negatively. Okay. I believe because Trump has made so many promises and because he has so much capital in the market and he's made all of these liquidity injections and all these promises to people, I think if the market reacts negatively, he will do something like he consistently does to make the market rebound. So this is why I say on the short term, I'm actually a little bit slightly bullish. Not crazy bullish. I'm not like freak out, dump my whole life savings into crypto. But according to this, the tariffs have impacted the market in a negative but a positive way. And I would say that all of the fear and panic around tariffs are probably out the window. And I will also say that Trump does have a consistent track record of bringing the market back up, even though there's panic and scare. Now, there's a whole bunch of other variables, and we're going to detail that in this video. It's probably going to be one of the most detailed videos you've ever watched. I have a very, very specific thesis because obviously as an investor, as a trader, I'm thinking about this with intent. So we're going to hit it from every perspective. The Federal Reserve, we're going to be looking at everything, what people are saying. We're also going to be looking at company treasuries in this video. So continue to watch, take notes, and listen because it's going to get real. So let's dive a lot deeper into tariffs and how they affect the economy. This is important. We have to understand both sides, the pros and the cons. So when we see the market react, we can adjust accordingly. So the first thing is there's a lot of people saying that tariffs can be inflationary. Now, this is important, right? Because the Federal Reserve interest rates are one of the most important variables for us to make money off of crypto and stocks, right? If they increase interest rates, they make the cost of borrowing money more expensive, meaning less people take loans, meaning less liquidity in the system. Less liquidity in the system means less potential energy for that liquidity to go into stocks and crypto. AKA, if the cost of borrowing money is more expensive, then stocks and crypto don't really do as well. But we're talking about inflation, and the Federal Reserve looks at inflation as a way to increase interest rates or decrease interest rates. So in case number one, if tariffs are inflationary, this could be, and I highly doubt it, this could be a reason for the Federal Reserve to increase interest rates, which is bad for crypto and stocks. I highly doubt that. I give the odds of that like less than 10%, in my personal opinion. Now, I want you to understand it though. You have to understand it. So for example, this is called cost push inflation. Prices rise because business costs go up. For example, The United States taxed imported steel, and prices on cars and construction materials went up. So electronics and appliances also saw price increases. This could increase inflation, maybe. But let's look at the other side of the story. So tariffs, and as you can see right there in point number 2, could also have a disinflationary effect, the exact opposite effect, which could be good for inflation, good for risk on assets, right? Basically, inflation could drop, right? And the Federal Reserve could be like, hey, inflation's dropping. Maybe we can lower interest rates now so more loans can be taken out and all that money can maybe potentially flow into stocks and crypto, right? So this could be really positive. As you can see right here, the tariff money goes to the government. So it actually takes cash out of the economy. That means consumers have less money to spend overall. Less spending equals less pressure on prices, meaning people don't have as much money, so they're not putting that money into like buying the Nintendo Switch 2 or something like that, right? And this is why tariffs are also seen as disinflationary. They cool down the economy and they don't heat it up. Now, look, I'm gonna be clear. Both sides have truth to it, I believe. And they usually kind of like even out. And this is why I looked at 2018 and 2019 specifically to see what happened last time, because believe it or not, this is not the first time Trump has put tariff policies on the United States. So we had some in 2018, 2019, and it had a very small impact on inflation, less than 0.1%. So really, what the Federal Reserve economists are saying are kind of accurate. They're saying that these tariffs shouldn't raise inflation very much. The impact will be minimal or non-inflationary at all. So the bottom line of what I'm trying to explain is for certain goods, we could have the costs go up, of course, but in the big picture, they act a little bit more like taxes. They pull money out of the system and slow down spending. So it's kind of like, to me, in my understanding of this, it's a net neutral. So when it comes to like the math behind it, and all the specifics of inflation, not inflation, Federal Reserve, et cetera, it's like neutral. We don't really know. But the claim I'm making is that the panic part of the tariffs, this big drop in Bitcoin and the big pump in Bitcoin, I think it had to do more perception of the public than it had to do the actual specific numbers. So that big panic is out the window. So perception-wise, it really does look bullish. It does look bullish. From the numbers, inflation in the background, all these like statistics, it looks kind of neutral. And this is what the Federal Reserve has been saying about tariffs. So just to summarize everything, if we look at the negative side, tariff can raise import prices and companies pass costs to customers and some prices go up. The positive side is that it's tax-like and tariffs remove money from the economy, less spending, less pressure on prices, which lowers inflation, and the Federal Reserve can switch to dropping interest rates because of it. Now, in the real world, it looks like this doesn't really affect inflation at all. And the Federal Reserve's view is that it's not inflationary overall, and it could actually cool down the economy, not overheat it. Now, the month of July is coming up, and let's get super specific, okay? I just want to be just very clear. I'm going to get blunt right to the point. The S&P 500 is considered a risk-on asset, meaning people buy into stocks when risk is high, when people have a bigger risk appetite. They want to take more risk, they buy into stocks. Crypto is like the same thing, but there's a bigger amplifier, meaning, I don't know, hypothetical, not exact numbers. If S&P 500 goes up 10%, then cryptos could probably go up like 30%. It's a higher amplifier, but they're both considered risk-on assets. So what I did is I looked into the S&P 500 all the way back to 1941, and we looked at the month of July to see if it's bullish or bearish. On average, in this month, is it bullish or bearish? And I also did the same thing with Bitcoin's price. So we looked throughout Bitcoin as well, all the way back to 2010. We looked at if it's bullish or bearish. I actually did it for every month to the end of the year. So you can, again, screenshot this if you feel led. Please, give me credit if you put it on your social media. That's fine, whatever. But definitely screenshot this so you understand. So we looked at the months and we combined them both. So we combined the S&P 500 and Bitcoin, averaged it out, okay? And it seems like July, and we actually even gave percentages, combined average percentage, July is 63.1% bullish. August is probably a bearish month, but 50 is the middle, so it's not that bearish. It's 44.6. Now, September is usually really, really, really bearish. October is a little bit more bullish than July at 67. November is kind of like July, and December is pretty bullish as well. So in general, towards the end of the year, in general, for risk-on assets, if we look at it just from purely a yearly perspective, next month is a bullish month. It should be a bullish month for crypto and Bitcoin. And yeah, if you feel led, you could take a risk off the table in August and September. But in the world of cryptocurrency, we just buy more, right? If you sell, you better have a good reason to sell, a really, really good reason to sell. So in this perspective, the next couple of months toward the end of the year is good. And if you've been watching my other videos, you've been seeing all of the data. I've been lining up the data, and every single perspective, it looks really, 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 really bullish towards the end of the year and the beginning of next year. Please understand, in 2026, we can really have an extended cycle. There's a lot of mechanisms and policies going into play that can increase the demand for Bitcoin and crypto assets on an absurd level. So we have a lot of potential. I'm telling you right now, and this is one of the things I've been talking about. I made a Bitcoin price prediction. I'll link the video right here for you guys. You can go ahead and click that. It's at the top. But basically, the whole point is that Fannie Mae and Freddie Mac, the two institutions that have the most United States home loans, are now accepting crypto holdings as a part of your asset profile when applying for a mortgage. So basically what that means is, if you want to buy a house, you have to apply for a loan. And before, they never took in consideration your crypto holdings as a vehicle or a method of understanding how much money you have, right, for a home loan. So you can now hold Bitcoin and cryptos, right, to apply for a house, and you'll get a bigger loan. You'll get a bigger loan. And I actually made the bull case, a really, really detailed bull case about how basically, according to the Bitcoin spot ETF, and this is just Bitcoin only, this estimation, by the way, is only Bitcoin, not even for Ethereum. I think there's going to be a lot more liquidity going into Ethereum as well. But by this estimation, we could see inflows of like $20 billion. Just alone from this one mechanism, just this one mechanism right here. Again, I want to be clear, this is just one mechanism. There's just the one piece of news. There's so many other things happening, but as you can see right here, if we look at a conservative, moderate, and aggressive scenario, we see at the aggressive scenario, a Bitcoin going to 200K from this one isolated perspective, right? And what this is a projection chart. And what I did is I basically looked at Bitcoin inflows from the spot ETF. We took the exact amount of inflows, and we played it out if this was similar to the Bitcoin spot ETF from a conservative, moderate, and aggressive perspective. What is the demand going to look like for Bitcoin's price? And as you can see right here, the model is projecting 133K Bitcoin, $200,000 Bitcoin. And again, the full video gives all the context behind it. But I wanted to show this again because, again, this shows beginning of next year. Let me show you what I'm talking about. So everybody's heard of this news, but nobody understands how these things are actually implemented. So what we created here is a side-by-side official hypothetical timeline table comparing the FHFA's 2022 desktop appraisal directive with a realistic timeline for crypto asset directive that he just recently talked about. So this recent crypto asset directive, they just started talking about it. They started going into communication about it. There's nothing official yet, but they did something very similar in 2022. And basically what I did is like, okay, so according to what happened in 2022 and the timeline of events that happened, can you give me a side-by-side comparison specifically, and it'll kind of give us a little prediction on when this actual policy can go into implementation to where you can actually go to your bank and be like, hey, use my crypto assets for this new house loan or whatever the case is. And according to these projections, we could see April of 2026. This is the beginning of 2026. So this whole extended cycle thing that I've been talking about, where we could have an altcoin season beginning of next year. I'm telling you, right? If we look at the dates and how they're lining up when it comes to interest rate policy, which we're going to talk about in this video, and many other things, it really, really, really looks, it's like a little bit bullish now. And then it's just like progressively getting more and more bullish. And there's more mechanisms to take demand and put it into crypto. There's a lot of mechanisms. There's a lot of liquidity and demand variables that are playing out right now because we have a pro-crypto president. And sometimes it just takes time for things like this to go through, right? We have the Genius Act, right? Which allows banks to create their own stable coins. There's so many variables that are not happening now, but will happen probably towards the end of this year, beginning of 2026. So yes, this could be like, hey, we're kind of early. Like, I know everybody says that, but like, bro, like the dates are lining up. Like we actually are kind of early. And so what I want to do is bring your attention over here, because on June 18th, right, the Federal Reserve was talking about interest rates. They're specifically like, okay, interest rate policy. It's called the FOMC meeting, right? And so there's FOMC meetings there's a certain amount, I forget the exact amount. And towards the end of the year, we have a couple. We have July 29th to 30th. We have September 16th to 17th. We have October, December. There's 4 FOMC meetings. And every meeting, they decide interest rate policies. They choose if interest rates are going up or down. And we talked about this before. I'm going to try to explain it again very simply. If interest rates go up, that means that the cost to borrow money, meaning mortgage rates, to take out a loan on a car, it's literally more expensive. It's more expensive to borrow money, means less liquidity in the system. And we talked about this before and how, earlier in the video about how tariffs could potentially negatively impact inflation, and maybe the Federal Reserve increases interest rates. I highly doubt that, and this is why right here. This is why the Federal Reserve is clearly saying the exact opposite. The Federal Reserve on their projections is saying that they're actually going to decrease interest rates, which is really, really good for crypto and risk-on assets. And we have 4 meetings where they could potentially do that, but they're making very clear claims right here. Very clear. Interest rates right now are at 4.25 to 4.5. They're making very clear claims by saying it should be 3.9 by the end of the year. That means there could be 2.25 interest rate cuts, 2 of them, in these 4 meetings. So in these 4 meetings, by the end of the year, they could cut interest rates twice, which will lead to more liquidity going to the system, right? It's almost like it's really small bullish right now, and then the bullish momentum's like increasing, and there's more things coming out. It's like, that's what it really looks like right now. Maybe we have a small dip, maybe, but if you stay patient, you have capital ready to deploy, and you just don't go all in on meme coins, you're good. Like, you're good. You just slightly deploy capital, boom, boom, boom. Towards the end of the year, we could have a really, really good towards the end of the year, beginning of next year. It could be phenomenal. And this will be like, Trump will be a year into office. So like, he'll have a lot of momentum on different things. He's a pro-crypto president, bro. This man made 20% of his net worth in the past year. It's probably the most lucrative business move he's ever made in his life, was adopting crypto. NFT projects, like I talked about this last video. I was like, bro, like, he's going to make it work. Like, he's getting rich off of it. He's getting rich off of crypto in a way that he has never done before. So I do believe, again, it's like slightly bullish right now. Maybe we have a small dip. And honestly, I just say maybe. I don't really have too much data, except for the fact that we have a high interest rate environment. But we see that they're easing it. They're slowly but surely injecting liquidity. And I believe the momentum will increase and increase and increase with the policy. The demand, the liquidity and the demand will increase. And this could be very beneficial for crypto and Bitcoin from this perspective. Let's go into other perspectives. Let's get even more specific. So there's something that just passed called the Big Beautiful Bill. Okay, it passed on May 22nd through Congress, and it's expected to be finished by July 4th. So obviously this is coming up. Now, the whole point of this bill is to save money. That's the whole point. There's tax cuts, spending programs, and then what they actually did is they increased the debt ceiling. So that allows the government to actually take on more debt. They pushed it to the future. So they took all the obligations, they pushed it to the future, and now they're allowed to borrow more. And according to the White House, they're saying it could create $5 trillion in deficit reduction. But that's assuming if their plan works out perfectly, which some of it will be blocked, some of it won't work. But if they get a fraction of that, I think that would be good, right? Because that means there could be a massive surge of government-specific money into the economy. And obviously, we know Trump wants asset prices to increase. So we have more spending, more borrowing, and more liquidity, okay? But again, the bill raises the debt by $5 trillion, guys. So that means that the United States government can actually borrow more money without running into the legal limit. So obviously, they're doing what they can. Interest rate policies haven't changed, but they're doing what they can. And we've been talking about specifically, I made a full 2 videos about this. but I want to give you the gist because there are some projections from the banks. We also talked about the SLR rule. The Fed is changing a specific rule, and we talked about even the time frames. This could happen towards the end of next year. So not right now, towards the end of next year, what they're doing is they're increasing the limit that banks have when it comes to holding capital for safety. So that essentially banks have to hold a specific amount of capital to protect themselves from default when it comes to taking out, right here specifically, how many treasuries they can hold without setting aside more capital. So banks had limits on this. And now what they're doing is they're becoming more relaxed. And the last time we had this happen was actually at the bottom of the market in 2020. So in 2020, the market fell. We all know this, right? Market fell, crashed. They decreased interest rates to 0 to 0.25. And it actually did exactly this. So we see, again, not full-fledged liquidity injection, but we see these little mechanisms of the government, these little mechanisms they're putting into play to inject more liquidity. We have the big, beautiful bill. They're changing the rule on the SLR, right? And these things take a little bit of time, but they're all kind of pointing towards the end of the year, beginning of next year, pretty much everything. And this is very bullish in the long run. I'm telling you guys, we're looking at it way ahead of the curve. So these things, like, of course, they're going to probably make headlines, hype people up. I get it. But I want to be specific about the timelines. When it comes to the SLR rule, when it comes to the big, beautiful bill, these are positive things. But there's a lot of momentum that needs to come into play for them to actually affect the market. So very, very bullish. And we'll be updating you guys on exactly what happens. But we're thinking towards the end of the year, beginning of next year. Now, if we look at this month, okay, specifically, we have a couple of interesting perspectives to look at when it comes to the demand side, meaning more people buying Bitcoin. So on June 23rd, Anthony Pompliano's Pro Capital, they actually purchased 3,724 Bitcoin at an average price of $103,000. That's, to me, kind of expensive. It could mean they're purchasing the top, or it could mean, I'm not jumping to conclusions, that they think the market's going to go up a lot more. So we see that. We also see ECD Automotive Design. And what they did is they're basically a luxury restoration company that's securing $500 million in equity facility to accumulate Bitcoin. So they're going to accumulate Bitcoin. It doesn't mean they bought Bitcoin, but we see kind of this trend of companies building crypto treasuries. Do you guys realize that I've talked about this like 4 years ago? Do you realize that it's one of the biggest reasons my company survived? Because I was building cash flow in my company, but at the same time I was taking that cash, I was dumping it into crypto, and like my trades like really saved, like it made me a lot of money. Like I probably wouldn't be here today making these YouTube videos if it wasn't for, me buying crypto really, really early on. And so it seems like there's a trend of people catching on to this, right? So they're even offering $21,000 in free upgrades for every early customer paying with Bitcoin, right? This is new demand. Now on June 22nd, the Texas government signed a SB 21 bill, or whatever the case is, officially allocating $10 million in public funds to create a strategic Bitcoin reserve. So Texas becomes the first U.S. state to put taxpayer money into Bitcoin, and others may follow. So this is real demand this month, real demand this month. So on the short term, again, it's hard to tell. But what I will say is that there's a lot of upside for sure with crypto in general in the longer time horizon, right? We could expect a little dip. Again, this is kind of the gist. We could expect a little dip, but I don't think the dip's going to be catastrophic. I don't think it's going to be big panic mayday mode, right? And as long as you have cash on the side to allocate when there are dips, this might be a really good sign for you. Now, just to sum everything up, right? So kind of my official thoughts of what I'm doing. Okay, this is what I'm going to do with my life. You can do whatever you want with your life. I don't think it's right now the time to take extreme risk. I think we can take some risk, not extreme risk. And obviously, none of this is financial advice. I want to be clear with you guys. But my thoughts are like, okay, look, Ethereum is extremely undervalued in comparison to Bitcoin right now. Like extremely. I talked about in the last video. I showed the ratio. Ethereum is not on Bitcoin standard right now. It's not. It's like so undervalued. And we know that Ethereum's pretty much, I can't say the word guaranteed, but the closest thing to guaranteed to be able to reach all-time high. And so we have a really, really good undervalued play on altcoins, and we know it's legit. We know it's not going to zero. We know for a fact Ethereum's not going to zero. So if you can hold on to that, you'll probably do well. So this could be an opportunity for me to take a little bit more risk and buy some Ethereum and start accumulating some Ethereum. Now, just keep in mind, everything we've been talking about, the deadlines or the dates are lining up towards the end of the year. Now, there's some deadlines that are a little bit earlier on, but kind of like the perspective I'm feeling right now with my whole theory is that a lot of this stuff is momentum based. So we have a little bit of bullish stuff happening right now, but it really feels like the bullishness is getting thicker and thicker as we get closer to the end of the year. When it comes to the two variables we look at, which is demand, how many people are buying crypto, and liquidity, how much potential energy is in the system. According to those two variables and everything we've been looking at, it really looks like it's just like kind of bullish right now, and it's getting bigger and bigger. And then towards the end of the year, beginning of next year is going to be crazy. I really believe that. I really believe the beginning of the next year it's going to be insane, right? So this could be an accumulation kind of vibe, right? Let's start accumulating, thinking about accumulating Ethereum, maybe some higher liquidity, higher market cap altcoins. And then I'm pulling together a really, really good research database. We went through like 250 altcoins, but not just any 250. We vetted the first 250. They're from a place of credibility. And I'm going through every single one. I'm making this master list. Okay, I'm gonna make a master list. And so as I'm accumulating Ethereum, the momentum builds. We see liquidity, we see demand. Maybe Bitcoin breaks all-time high, right? Bitcoin breaks past all-time high, whatever the case is. Then I can start taking that liquidity that I have in Ethereum and start moving it into lower market cap altcoins to try to get the 20 to 50x of what I pretty much always look for. I'm looking for 20 to 50x's, right? That's the majority of my portfolio will be allocated to these smaller liquidity coins because that's what I do. That's what I do the best, right? And so in general, in the past, I've made claims very specifically that we could have a panic event. I think we probably had the panic events already. And I think crypto held up very well. Two big events. Number one, tariff policy scare. Drop the market, we bounce right back, okay? Number two, this whole World War III scare. This whole thing was actually scary. It was literally like the biggest scare in the last 10 years. Bitcoin's price was not affected at all. So we've already had the big panic events that basically I tried to predict, right? Crypto kind of held up pretty nicely. If we think about it from that perspective, and then at the same time, Ethereum is extremely undervalued in comparison to Bitcoin. Bitcoin's been holding up because it's like a precious metal, right? Bitcoin's a weird hybrid between risk on and risk off, right? Clearly. So precious metals right now are at all-time high. Platinum, gold, these are at all-time high. So the environment's kind of like people are a little bit scared, and this is why you see gold running. But gold is doing nothing compared to Bitcoin. Even though gold's breaking all-time high, Bitcoin, if you would have held Bitcoin, you would have made more money. So it's weird. It's definitely weird. It's definitely different. This could be the weirdest extended cycle we've ever experienced for sure. And so again, like the panic's already happened. Maybe there's another panic. I don't know how. Maybe there's another panic, but the panic's already happened. It didn't really affect crypto in a super negative way. We have little events that does bring demand and liquidity right now, small events, but it looks like the events are getting bigger and bigger as we get into the end of the year, the beginning of next year. Officially, what I'm probably going to do is start accumulating Ethereum and higher liquidity coins. And then as I see more clarity, as we see momentum and liquidity and demand, I'm going to take those coins and diversify them into lower liquid projects. And then my official thought is, yeah, we probably are going to have an extended cycle because it seems like everything is lining up for the beginning of next year. And just another one perspective so you guys understand. According to history of the S&P 500 and Bitcoin's price, it seems like we should have mostly bullish months until the end of the year. So yes, I am officially leaning from the short term and the long term. I'm officially leaning bullish. I'm like 70% bullish, 30% bearish. I am precautious because I'm not a fool and I will not buy green. I'm only buying red. These are things you have to understand. I'm definitely using aggressive risk management. Actually, how about this? If you guys want me to make a risk management video on how I'm going to accumulate these coins, go ahead and leave a comment below and we'll talk about it. But that's pretty much it for this video, guys. Thank you for watching. Thank you for being a part of my journey, of my growth, as well as the growth of the channel, as well as the growth of my portfolio in cryptocurrency. I appreciate you guys. You are a part of the next financial revolution. This is the next financial revolution. We have not experienced a change in infrastructure of our current financial system since 1902. Since the creation of the Federal Reserve, we've never seen anything like this before. So you are a part of the revolution of our monetary system. As long as you stay consistent, you stay patient, and you do not stop working hard, you will benefit from it. You will, no matter how much money you lose or how much money you get hacked. I am a physical person that's gone through all of it. You guys are seeing the example. I post videos when I'm broke. I post videos when I get hacked. You guys see the whole entire story. And this could be for you as well. As long as you stay patient, disciplined, you actually put in the work. You have to put in the work. And also, before we leave the video, I recommend 15 to 20 minutes in the morning. Come on, guys. 15 to 20 minutes, look at what's going on, and then spend at least like an hour a day. So I always recommend in my groups, 7 to 10 hours a week is probably a good, especially if you have a job or whatever the case is, it's a good bare minimum. Bare minimum. So if you're doing 7 to 10 hours a week, you're bare minimum. And I believe, depending on who you're watching videos shouldn't be a part of your research only. If only watching videos is your research, you're making a grave mistake. A grave mistake. You actually have to understand these things. You actually have to really put the tire to the street, actually research altcoins, actually understand the Federal Reserve, actually do some digging, actually create your own reports. That's real research in my perspective. Not watching YouTube videos. YouTube videos are a good starting point. They give you context. They give you one person's perspective, but you have to dive deeper. It's the same thing with my videos. You have to understand. There's nothing worse than somebody that gets rich off an altcoin, gets 100x or whatever, makes their first $1 million, but they don't know how to do it again, and they don't know what they're doing. They just got lucky. That sucks. And that used to be me in the past. That was me in my first cycle. I had no idea what I was doing. And it led to 4 years of pain, and I missed out on a whole bull run because of it. And I don't want that to be for you. I want you guys to be consistent. I actually want you to win, and I want you to get predictable wins, consistent wins over time, where you're winning nonstop, and you have a system to continue to win, right? That predictability compounds, and that makes you substantially more money than finding 100x one time and then bragging about it on the internet. There's nothing worse than somebody that gets rich or even wants the desire to get rich that are not willing to put effort behind it. A lazy rich person is the worst type of person. Don't be that guy. Don't lust over money. Don't have the desires and all these things, but you don't want to put any work. Ugh. That was me. And I'm trying to help you guys. The whole purpose of this channel is to save you time, right? Save you time and headache and kind of show you what I'm thinking and the perspective over here. So hopefully that resonates with you. And if it doesn't, it's okay. It's okay. Thank you guys for watching this video. Like I always say, if you don't get with it, you will get left behind. Catch you guys in the next video. Peace out.